everyone wants to really understand the big stuff, right? Like the stuff that really matters, especially if it affects them personally.
Yeah.
But honestly, who actually has the time to, like read all those long reports and try to decode all that policy jargon?
Right.
But that's what we're here for, to help you make sense of these really important issues.
Exactly.
So today we're going to take a really deep dive into the current state of the federal student loan system here in the United States.
I mean, and complex is kind of an understatement.
It really is.
When you think about this issue, right, it's like we're talking millions of people, trillions of dollars.
It's massive.
And it's constantly evolving.
Yeah. We've got a ton of sources for this one, some really interesting stuff.
Yeah,
We've
absolutely.
got articles with insights from researchers, policy analysts from all different perspectives.
Yeah, we've got folks from AEI, that's the American Enterprise Institute. They're considered a conservative think tank.
Right.
Ed Trust, an education advocacy group. And the Urban Institute, that's nonpartisan.
Always good to get a range of viewpoints.
Exactly. And of course, we can't forget the official sources. We're also looking at info straight from the Department of Education and even
Small Business Administration.
So
Yeah, a lot to unpack there.
that's a little hint towards where we're going with this.
It is.
But yeah, so today's deep dive, our goal really is just to cut through the confusion, help you understand what's actually happening with student loans right now.
Exactly.
Why is there so much uncertainty about repayment? What are the actual risks of default?
Yeah.
What are the rules for these income-driven repayment plans? What's happening with loan forgiveness? And like you mentioned, this huge possibility of the entire program being moved to
Whole different agency.
yeah, totally different agency.
Yeah, wild.
It's a lot. So let's kind of start unpacking all of this.
Yeah.
And I think maybe the best place to start is with this just general feeling of instability.
It's palpable.
It really is. You read these reports and you're just kind of like, what is going on?
Yeah. What is going on? And Beth Akers from AEI, she put it really well. She said, we're in a period of unprecedented uncertainty.
I mean, and when you look at some of the numbers, it's really not hard to see why.
Right. So we've got 8 million borrowers.
8
million borrowers who are just waiting to find out if the repayment plan that they're on right now is even legal.
Like the one they signed up for?
Yeah, that's got to be a lot of financial anxiety.
For sure. Huge.
But that's just one piece of the puzzle.
Totally. Yeah. I mean, beyond that, you've got a staggering 9 million borrowers who are currently behind on their payments.
Wow.
That is
Yeah, how are they supposed to manage all of this with half the people?
It's a great question. And then you add that potential agency transfer on top of everything else.
Yeah, the whole thing feels very much in flux.
In flux is a good way to put it.
So let's talk about this risk of default, because it sounds like this is a really real threat for a lot of people.
Yeah, and I think to really grasp that, we kind of have to think about the big picture, right? During the pandemic,
Right.
there was that pause on student loan payments.
Yeah, everyone remembers that.
But that pause also essentially hit pause on the whole process that leads up to default.
Okay.
But that pause is over.
It's over.
It ended October 1st of last year.
Okay.
And that, what some reports call the master clock,
Okay.
has started ticking again.
So what does that actually mean for someone? What happens when that clock runs out?
Okay, so the first thing that happens is you hit delinquency, right?
Yeah.
Which basically means you are more than 90 days late on a payment.
Right.
And at that point, that information gets reported to the national credit bureaus.
Credit score takes a hit.
Yeah, and we all know that domino effect, right? Lower credit score. Makes it harder to get a mortgage, harder to get a car loan, even harder to rent an apartment.
It affects everything.
Yeah, it really can.
Okay, so that's delinquency. And then what? It gets worse. Right?
Yeah, then we start talking about default. So after 270 days, basically about 9 months without a payment, that loan is officially considered in default.
Oh, wait.
And that's where things get really serious. At that point, the government can actually seize your wages.
No way.
Yeah, and even take your tax refund.
Oh, wow.
So it's one report put it, even if you don't pay initially, you could end up paying involuntarily down the line.
That's really scary.
Yeah, it is a stark reality.
And the numbers are really concerning, right?
Yeah, we're talking over 4 million borrowers, more than 90 days late, and then almost another 5 million in that 1 to 90 day window.
So many people.
It's a lot. I mean, Will Del Pilar from Edtrust, he actually predicts we're going to see a explosion of delinquency and defaults.
Wow.
But on the other hand, Scott Buchanan from the Student Loan Servicing Alliance, they represent those companies that manage the loans. He says a lot of those defaults were probably avoided during the pandemic because of the payment pause.
Right.
So what we're seeing now is kind of that backlog.
Like catching up.
Yeah, almost like releasing pressure that had built up.
And Buchanan had some really interesting advice for people in this situation, right?
Yeah, he basically says, like, answer your phone.
If your loan servicer's calling.
Exactly, yeah, because a lot of people, they think it's just a sales call.
Right.
But his point is that it's not. It's usually them trying to help you with a problem.
Before it becomes a bigger problem.
Exactly.
Okay, so that's really good advice. I mean, if
Yeah.
you're in that situation, answer the phone.
Definitely.
Okay, so let's switch gears a little bit and talk about these income-driven repayment plans. And specifically, I think we should talk about the SAV plan.
Yeah, that's saving on a valuable education, right? It's gotten a lot of attention, a lot of people really excited about it.
Yeah, it seemed like a really good deal.
Yeah, I mean, about 8 million people enrolled in it because it had these really generous terms and the potential for loan forgiveness.
Right, but then
But then,
the legal challenges started.
exactly, yeah, those generous terms that everyone loved, they actually became the basis for these legal challenges that are questioning if the SAVE plan is even legal.
So it's in limbo.
It's in total limbo right now. I mean, people enrolled in it. They're not currently required to make payments, but
But it doesn't look good.
it really doesn't.
So if you're someone who is like banking on the SAVE plan to help you manage your loans,
You might want to have a backup plan.
yeah. I mean, Jason Delisle from the Urban Institute, he actually said he thinks SAVE is probably going to be eliminated.
Either by the courts or by Congress.
Yeah. So one way or another, it's probably not going to be around for much longer.
Seems that way.
Now, this is where it gets interesting. There are reports suggesting that Republicans in Congress actually would prefer if the courts didn't strike down SAVE first,
And why is that?
because they're thinking about using a budget reconciliation bill to end it themselves.
Okay, so what's the strategy there?
So this is, according to Beth Akers over at AEI, if they can kill the SAVE plan through Congress, then they can use the money they save
To do other things.
to help pay for an extension of the Trump tax cuts.
So it's all connected.
Yeah, it all ties back to these bigger political and budget issues.
Fascinating.
It is. It is. Okay, so, but the thing is, all this legal stuff with SAVE, it also affected the other income-driven repayment plans.
Oh, right, like payee and ICR.
Exactly. So because of all these legal questions around SAVE, the Department of Education was like, okay, we got to take down the online form for enrolling in payee and ICR.
So people couldn't even apply.
They couldn't apply.
What?
It says they had to make sure that those plans were, in line with the court ruling and everything.
I mean, that had to be so disruptive for borrowers.
Oh, it was. If you can't even access the form, you're just totally stuck.
Yeah, totally.
And this was for like a month that the form was unavailable.
Oh, wow.
And it caused a lot of problems for borrowers who were already in those plans and needed to like recertify their income.
Right, because if you don't recertify, your payments could go up.
Exactly. And we even heard a story about this borrower in Austin, Texas, whose monthly payments like quadrupled. Quadrupled.
Yeah.
Because they couldn't recertify their income during that time.
That's brutal.
It is. It really shows like the real world impact of all this uncertainty.
Yeah, for sure.
But Scott Buchanan, he says this wasn't like some evil plot to punish borrowers or anything.
Right, what did she say it was?
He said it was just a practical issue because of the court ruling.
Like they had to update the form.
Yeah, exactly. He said the previous administration actually did the same thing at one point, temporarily took down the form.
Okay, so it's happened before.
It's happened before. Okay, so let's shift gears a little bit again and talk about public service loan forgiveness, PSLF.
Okay, PSLF, big one.
A lot of people working in public service, they're relying on this program.
Yeah, to get some debt relief.
Exactly. So what's the situation with PSLF right now?
So the key thing to remember about PSLF is that it was actually created by Congress.
Okay.
So that means that only Congress can get rid of it.
Okay.
Unlike AZE, which was created through executive action, PSLF is actually like written into law.
So it's more stable.
Much more stable.
Okay, that's good news for people who are in that program.
Yeah, definitely.
But I thought the Trump administration, they wanted to make some changes to PSLF.
They did. There was this executive action from the Trump administration where they proposed some restrictions
Okay.
on who could be eligible for PSLF.
Okay.
And they were specifically targeting organizations that they said were involved in activities with a substantial illegal purpose.
What does that mean?
Yeah, well, they gave some pretty specific examples.
Like violating immigration law, supporting terrorism. They even had some very specific examples related to child trafficking in the context of transgender issues and violations of state public order laws.
Wow, okay. So that's pretty specific.
It is, and I mean, arguably pretty politically charged too.
Yeah, I mean, what was the rationale behind that? Why did they want to make those changes?
Well, a lot of Republicans were saying that the Biden administration had made PSLF eligibility too broad,
Okay.
so they wanted to kind of rein it back in.
Okay.
But the really important thing to remember here is that these were just proposed changes.
They didn't actually happen.
Yeah, they're not in effect right now.
Okay.
And they would have to go through this whole rulemaking process before they could be implemented.
So for now, PSLF is still the same.
Yeah, for now, it's business as usual.
Okay, good to know.
Yeah, and the Federal Student Aid website, they're very clear about that. They say there are no changes to PSLF currently, and borrowers do not need to take any action.
But there is one important thing to keep in mind here.
Oh, yeah.
If you're one of those borrowers who's kind of in limbo with the SAVE plan,
Right.
and you're not making payments right now because you're waiting to see what happens,
Yeah.
those months that you're not making payments, they don't count toward the 10 years of qualifying payments for PSLF.
So if you're hoping to get PSLF and you're in CBE,
You need to be aware of that.
definitely.
Okay, so stepping back for a minute, it feels like all of this, the legal challenges, the changes, it's just creating so much confusion.
Oh, yeah. It's a mess.
And not just for borrowers, but even for people like us who follow this stuff closely.
It's true.
I mean, Jason DeLille from the Urban Institute, he's like an expert on this stuff. And even he said, quote, "It's hard for me to understand what's happening."
That's saying something.
And Beth Akers from AEI, she talked about the overload of information
Right.
and how it's really hard to figure out how all these changes are actually going to affect individual borrowers.
Like, what does it actually mean for me?
Yeah, exactly.
And then you've got this whole staffing issue at FSA. They've cut their staff in half, and they're the ones supposed to be managing all of this.
Yeah, I mean, that can't be good for customer service.
It's not.
Huh?
I mean, pretty much every expert agrees that these staff reductions at FSA are going to make things a lot harder for borrowers.
I mean, we even have some data on this, like how long it takes to get through to loan servicers when you call them.
Oh, really?
Yeah, so 4 of the major servicers, their average call answer time was under 6 minutes.
Okay, that's not bad.
But Mohila,
Mohila,
they had an average wait time of 2 hours and 24 minutes.
2 hours.
2 hours and 24 minutes.
That's crazy.
And in Mohila, they handle a lot of the more complex situations like PSLF, the income-driven repayment plans.
So it makes sense that they might have longer wait times.
Yeah, but
A
still,
long time.
it's a really long time. I mean, reportedly, a lot of people just gave up before their call was even answered.
Yeah, I mean, if I was on hold for 2 hours, I'd probably give up too.
Yeah, and Scott Buchanan from the Student Loan Servicing Alliance, he's saying that FSA hasn't really gotten enough funding.
So they can't provide good service.
Exactly. And he says that Congress needs to give them more money if they want things to improve.
Otherwise, it's just going to get worse.
Yeah. And Zampini from the Institute for College Access and Success, he put it really bluntly. He said, quote, "The system cannot hold, the system will not function properly, and borrowers will pay the price."
That's a pretty stark warning.
It is. It is. And then on top of all of this, we have this whole other thing to talk about. The potential transfer of the entire student loan program to a different agency.
This came out of nowhere.
It really did. So initially, everyone was kind of expecting that the loans might be moved to the Treasury Department.
Right, that was the talk.
Yeah, and it even made it into that Project 2025 blueprint.
That's right.
But then all of a sudden, the Trump administration announced they want to move it to the Small Business Administration,
The SBA.
the SBA.
That doesn't seem like a good fit.
It doesn't, does it?
I mean, the SBA is focused on helping small businesses, not managing trillions of dollars in student loan debt.
Exactly. And we're talking about like a $1.6 trillion portfolio.
That's massive.
It's huge. And the SBA has never handled anything on that scale before.
I mean, they did manage some of those COVID-19 relief programs, but those were temporary.
Yeah, and not nearly as big.
Not even close.
And then to make matters even more complicated, the SBA is facing their own staff cuts, like
Yeah.
over 40%.
So they're going to have fewer people to manage even more work.
Exactly. And does this even make sense?
I mean, where's the logic here?
Yeah, you've got an agency facing huge staff cuts, and now they're supposed to take on this massive, complex program that they have no experience with.
It just doesn't seem well thought out.
It really doesn't. So where do things stand with this proposed transfer right now?
Well, the SBA has said that they're working closely with the White House, Department of Education, and Congress to finalize a plan for the strategic transfer of responsibilities.
Okay, so they're acknowledging it's happening,
Yeah, they're not denying it.
and they mention Congress.
That's important because legally, the Department of Education is the one who's supposed to be managing these student loans.
So they need Congress to sign off on this.
Exactly. They can't just do it on their own.
Okay. And it sounds like even some Republicans aren't on board with this plan.
Yeah, House Education and Workforce Chair Tim Walberg, he said he was surprised by the SBA proposal,
Okay.
and he specifically mentioned that the Treasury Department has way more staff.
So they would be better equipped to handle it.
Right, and there have even been reports that some Education Department officials are meeting to discuss the Treasury as a possible alternative to the SBA.
So maybe there's still a chance this could change.
It's possible.
What are some of the specific concerns about the SBA taking over?
Well, a lot of conservatives, including Jason Delisle, they're worried that the SBA just doesn't have the experience working with colleges and universities.
Right, that's a big part of managing student loans.
Yeah, and they're also concerned about the timeline.
Like they don't have much time to learn everything.
Yeah, they've got to figure out this whole complex system really quickly.
And FSA, they mostly deal with direct loans from the Department of Education to students.
Right.
So the SBA would have to learn a whole new way of doing things.
It's a huge shift.
Michael Negron, he worked on this stuff in the Biden administration. He had some interesting things to say about this, too.
Oh, yeah. What did he say?
He basically said, if this transfer happens, the SBA's portfolio is going to get way bigger and way more complicated.
Right, and they're already facing staff cuts.
Exactly.
So how are they supposed to manage that?
Yeah, and he also questioned whether all the expertise from FSA would actually transfer over to the SBA.
Good point.
He said it could work.
But it's a big if.
Yeah, he said it would take a lot of resources and planning.
Which doesn't seem to be happening right now.
And the White House, they've said that they want to get rid of the Department of Education.
They want to keep the student loan program?
Right, they want to make sure that those critical functions are protected.
Okay, but how are they going to do that?
That's the big question.
Yeah, it's all very vague.
And some people are worried about how this is all going to affect the FSS.
The application for federal financial aid.
Exactly.
Yeah.
Because if there are problems with FAFSA, that's going to affect a lot of students and families.
Yeah, for sure.
And we've seen how messy things can get with FAFSAs in the past.
Right.
So this reorganization, it could make things even worse.
It's definitely a concern.
So it seems like with this whole transfer thing, there are a lot more questions than answers right now.
Yeah, a lot of uncertainty.
And we even heard from some former Trump administration officials who were saying that maybe they should create a whole new agency.
Handle student loans.
Yeah, a completely independent agency.
Instead of moving it to the SBA.
Exactly. So Bob Idle, he was a senior official in the education department during the first Trump administration.
Okay.
He said he doesn't think just moving the existing FSA model to another agency is going to fix anything.
Like the model itself is broken.
Yeah, exactly. But then you've got Rep. G.T. Thompson from the House Education and Workforce Committee. He's saying he thinks the FBA can handle it.
So there's a lot of disagreement even within the same party.
Yeah, there's definitely a lot of different opinions on this.
So what's the takeaway for borrowers? What should they be doing right now with all this uncertainty?
Yeah, good question. So the one thing that all the experts seem to agree on is that borrowers need to become their own advocates.
Like, do their own research.
Yeah, exactly.
Don't just wait for someone to tell them what to do.
Yeah, because right now, with all this going on, you might not get clear information from the Department of Education or your loan servicer.
Right.
So you really need to understand the details of your own loans, look at the different repayment options, and stay informed about any announcements or changes.
Be proactive.
Yeah, be proactive.
Take control.
Exactly. All right, so let's just do a quick recap of everything we talked about today.
Okay, key takeaways.
So we're in a really unstable time for the federal student loan system.
Super unstable.
Millions of borrowers are at risk of default.
Yeah, the numbers are pretty scary.
The SEE plan is probably going to be eliminated.
One way or another.
PSLF is the same for now.
But who knows what'll happen in the future.
There's a lot of confusion because the system is really complex.
Right.
And FSA, they're understaffed and underfunded.
So they're struggling to keep up.
And then on top of all of that, we might be seeing a major change in how student loans are managed, possibly moving to the SBA.
The SBA.
It's a lot.
It is.
And, you know, one thing we really need to emphasize is that that period of leniency after the pandemic, it's over.
The party's over.
Yeah, and the reports were very clear about this. The default clock is ticking. Yeah, so here's a final thought for you, our listener. With all this uncertainty, all these potential changes, what are you going to do to understand your own situation and make sure you're protected? Have you looked at your loan documents recently? Do you know what your repayment options are? Are you staying informed about any announcements or changes? Now is the time to really take control of your student loans.
Don't wait until it's too late.